And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Tuesday, June the 21st. I hope you had a nice weekend. Happy Father's Day and happy Juneteenth celebration, everybody. My name is John. Thanks for trusting me with your time. We come in today on the first day of summer, the longest period of sunlight in the northern hemisphere. If you're up anywhere near the Arctic Circle, it's not even going to get dark today. It's kind of amazing the way the world works. And don't forget, yesterday was a holiday. It was a non-settlement day. Settlement remains at the settlement level of Friday. So if that's going to affect your trading at all, it's important to keep that in mind. It does sometimes affect mine in the kind of longer daytime frame trades that I look for. So just keep that in mind. As far as economic numbers this morning, 9 o'clock this morning, we're expecting existing home sales, which many are suspecting are going to be lower than expected. 10 o'clock, we have a talking Fed. Barkin is going to be barking. He's also barking at 2:30 today, and it's kind of a thin week as far as overall economic numbers. Tomorrow we have Jay Powell speaking at 8:30 in the morning, Charles Evans speaking, Harker barking at 12:30 Central Time, as well as barking again. So no major economic information tomorrow either. Thursday, of course, as always, we have jobless claims. We have PMI composite flash, which may be somewhat impactful. We have Jay Powell speaking again tomorrow at 9 a.m. Not tomorrow, Thursday at 9 a.m. EIA natural gas 9:30 and petroleum at 10 p.m. That's all on Thursday, of course, with the EIA petroleum status report moving one day further ahead due to the holiday on Monday. And then Friday, new home sales, Michigan consumer sentiment. So we are really not looking at a lot of economic numbers that we're going to be expected to move the market a lot. So we are freewheeling it, if you will, without a lot of economic numbers to guide us. Yet to this morning, we're looking to open higher stocks, stock futures, all opening higher on kind of low volume yesterday, lack of participation yesterday. So all the participants will be back and ready to impact the marketplace today. Our equities are through with rollovers, so we're going to be able to begin to depend a little bit more on that volume and open interest as we keep moving forward. I'm looking forward to having that opportunity to use that as a kind of guide and a context tool. By the way, we're always focusing on finding accurate context, thinking about risk management, and exhibiting extreme patience in these markets. Goldman, Deutsche Bank, and Elon Musk have all stated the increasing likelihood of a U.S. recession if we're not already in it. Russia and European Union tensions have heightened over the weekend and yesterday. While Russia has cut natural gas supplies, Lithuania has now cut the ability to transit most goods across its territory into Russia. Russia has promised retaliation on that, of course. And crude prices have firmed a little bit as the president mulls a federal tax holiday on gasoline to maybe help relieve at least a little bit of the pain we're all feeling at the pump. I don't think it's going to make that much of a difference for us. As always, make sure you hit the lucky like button, share, comment, question, feedback. Heckling and love are always welcome here on the Market Forecast, Market Recap. We do have the ability to subscribe to our YouTube channel so you can get notifications when we do go live. Looking at the VIX, the dollar index, and the 10-year yield, the VIX off a little bit this morning, just above 30 at 30.5. Dollar index a little bit lower this morning, 104.25. And the yield on the 10-year up slightly at 3.27. Here's the link for Make Hogue Money today. Coming in on Thursday hot here with the forecast, Make Hogue Money, and a busy morning for everybody. So I look forward to seeing you there. If you've never been to Make Hogue Money, we're going to just put up the S&Ps. We're going to talk about trades that you bring to the table. We're going to discuss, vote, and take those trades if we agree on them. It's always a lot of fun. I always learn a lot, and I hope that you do too, coming to Make Hogue Money. So, good morning to everybody. Tachyon Brody from the Olympic Peninsula, up there in Washington State. Looks like a beautiful part of the country. I took a 3-month-long motorcycle trip, and I did not get to Seattle or Tacoma or the Olympic Peninsula on that trip, and I'm wishing that I had. JTS Wave, good morning. Shaw, good morning. Scott Saw, and he conquered. Theo, always a pleasure to see you this morning. Terry King, Dimitar, Jordy, chilling with Dylan. Hope you had a good weekend too. Ricardo, Zerain, Manuel Caesar, Alfred. Good morning, Grim Reaper. It's a miracle. Don't have any questions for you today. Unbelievable. That's okay, Grim Reaper. If you do have questions throughout the day, today and tomorrow is group coaching again, so we can address those questions, if not in the forecast, in group coaching. Glitter Sandwich, good morning. Tachyon. No trading yesterday. Good. You had a good Friday session. No trading yesterday. Good. Anissa, good morning. James, good afternoon to you. Frederico, Rob T. Denise, good morning. My guy Vince, you had a good vacation, my friend. Looking forward to seeing you today. Jack, why don't all these guys stop talking? Yes, the talking feds, of course, right? Jan R. Bill, good morning, Dead Letter Opener. What's up, speculators? Brian Douglas, Trading Research. Chris Hayes, good morning, Zachary. Patrick, it's a beautiful part of the country. Yes, you should get there next time. I certainly will try. Jimmy Decker, good morning. Dr. VJ, a pleasure to see you. And Dan Trader, good to see you this morning. So it is Make Hogue Money today. We're going to be efficient going through the charts today so that we can all be in Make Hogue Money with about 10 minutes to spare before the S&Ps open to see what kind of opportunities we have. The way things look to me, these markets are looking relatively unremarkable today. I'm not seeing anything that's really jumping out at me early in the session, and we don't have to take trades and make Hogue Money. We only want to take trades that we agree on as legitimate, good opportunities with good risk management. Good morning, Keith. Good to see you, sir. Joe, good morning. Marcelo. All right. George says, good morning. Good morning to you, George. Melk, good morning. All right. So let's take a look at what I think the markets are as relatively unremarkable. Doesn't mean there's not opportunity. And I've been right before. These markets love to make a liar out of me. So let's go ahead and take a look. George, das Wetter ist schön. There's a new word that I brought out from the back of the archives. Schön with the umlaut over the A, over the O. I believe that means pretty. It's a pretty day. It's kind of hot. Heiß und schön. All right. Let's jump into the S&Ps now. What are we looking at here? We have expiration on Friday brought an open interest increase, even in the expiring number, even in the expiring month. I mean, Looks like we've got about 492,000 that are going to expire and that are going to settle in cash today. That's about normal. It's not unusual to see anywhere between 400,000 and 600,000 expire and settle in cash. So what do we have going on? Do we have new bad news? No, we don't have any economic bad news here yet. We are still looking for existing home sales at 9 o'clock Central this morning. So the market has begun to grind to the upside. Now there is still bad news out there. I mean, the uncertainties in the global situation was a little bit higher tension between Russia and the European Union and Europe. Doesn't seem to be affecting our markets here, at least not yet. So the market seems to be grinding higher, but it seems to be grinding higher in a fashion that is creating a potential bear flag. Let's take a look. So here's Friday, Thursday night, Friday, Monday. Very abbreviated day. You can see there's absolutely no volume. So settlement remains here. That it is Friday settlement, 36.75.75, as yesterday is a non-settlement day. That there's always a way that the market finds to screw things up for me in this regard, because number one, my profiles on my other platform keep the profile running from yesterday today. So it just changes the way the market looks a little bit. Even some charts are going to maintain yesterday as today's bar on the daily bar, because it was a non-settlement day yesterday. So we have to be careful and we have to be aware of these things. So here's the bear flag that I'm starting to look at here. I mean, we were even here. We put in a higher day on lower volume. Volume remains to be very low. It's going to be interesting to see how this market opens up. Now, if we open with a gap above yesterday, is it that important, as there were no bigger players yesterday? I'm looking at more of the fact that we are going to open with a gap from Friday, which we had some significant volume. Okay, so our overnight low from last night lines up very nice to it. So the overnight low from last night is an important inflection level for me. If we do break out below this bear flag, I'll be monitoring for participation. I want to see some good volume, momentum, participation, and volume, participation, momentum, and what's the fourth leg? I can't think of it right now. We'll think of it later. So I think there's a chance of a continuation of the downside, because number one, we have overnight inventory to the long side, and that overnight inventory, I believe, comes all the way back to the open on Sunday night, which was right about here. So we got a little long in the tooth here as far as short time frame is concerned. If we can't maintain this gap, then I see this market giving us another opportunity for a move back down to settlement. See, what I think makes these markets a little bit unremarkable is the fact that since Friday we've seen virtually no volume. So I'm watching the bottom of this bear flag. I'm watching the overnight low, and then I'll be watching settlement to the low of value from Friday for short time frame levels to look for. Here's crude oil, which has come off significantly, particularly on Friday. We had a really big down day, and we added 3,600 estimated open interest. Now that is the first day of the August contract, so the volume and open interest is still a little blurry, as we have yet to expire the July contract. Friday's open interest does indicate that we've added some short bets to this market. So the supply increase is not that likely. It seems as though everybody's fighting, digging for more crude oil and getting it to a refinery so that we can have greater supply so we can lower price. So what we have here is a demand side auction. On Friday, there was a lot of concern as to whether we were going to have that demand as the economy is beginning to suffer and fall into a potential recession. So I think that was a big part of what happened on Friday. But as again, we have to be looking at this market from the supply side. Supply has largely been reduced in the world, of course, because of Russia, and of course, because we're not digging up as much, and we don't necessarily have the capacity right now to refine it. So I'm not really looking for a big move to the downside here. And of course, markets like to make a liar out of me. We're looking at demand side. So if we just continue to see demand increasing, we're going to continue to see crude oil increase until we can do something about the supply. Here's the 30-minute chart. So yesterday, inside value from Friday, settlement, we'll always mark this, 107.99. We're holding some overnight inventory to the long side, and we are going to be and have opened with a gap above yesterday, but in the range from Friday and largely within the value area from Friday. I'm putting a lot more weight on the information from Friday than I am on the information from yesterday, as there was very little participation throughout the session. So we've opened with a gap. We've opened away from settlement. We've got overnight inventory to the long side. There's still potential repair for this market above, but I'm still, I'm going to be probably trying to stay patient, seeing if we can close this gap, looking for opportunities for longs at lower prices. And where are we as far as expiration? Let me give that a quick look here for everybody. Expiration of the July contract is, the last trade date is today. So after today, we'll be able to, again, depend on volume and open interest for the next 3 weeks. That gas rollover is on Thursday. So we're kind of at the end of the rollover, which I'm very happy about. So overnight inventory to the long side, a little bit of repair likely above, but if we can't leave the value area from Friday, I'll look for opportunities for price to continue to give us opportunities for potential longs at lower pricing. Maybe there's an opportunity for a short here, but the short isn't anything that I want to marry for the entire day. A short is going to be a defined entry and a defined exit. Overnight low lines up nicely with Friday's point of control. Settlement and yesterday's point of control likely to be good visual targets for a downside move as well. But again, I don't want to fall in love with shorts here, because I think the demand side of this market is going to remain relatively strong. Let's take a look at the natural gas here. I'm sorry, Nasdaq. What am I talking about? Natural gas. We do that last. I think it's been off for 3 days. I forgot what I was doing. Open interest, weak at the lows. Yeah, this was Thursday, Friday. Volume okay. We lost 6,400 off the low on Friday. That's an indication of potential short covering. And it takes buying power out of the marketplace, but the market has been continuing to grind higher in what may be creating, again, another bear flag. What's it look like on the 30-minute chart? AZDZ, good to see you. Sarah Hall, as always, good morning. Prayers and love to you as well. Mike, good morning. So here's our bear flag in the Nasdaq. Settlement, remember it's Fridays, 11,296.75. We've got movement in the opposite direction of the bigger picture on lower volume, losing open interest of 6,400 here on Friday. I didn't put the profile on from yesterday. Let me put that on there so we can see where the time parameters are. And there it is. So opening again with a gap above yesterday and above Friday. Overnight inventory I'm viewing as the inventory from Sunday night on. Look at the volume. There was no bigger participation in this market yesterday. It's as though this was all one big long night like they're having today in Antarctica. The sun won't even come up down there. This is one long night. So looking at this, looking at the bear flag, looking at the overnight inventory, if we don't bring in new business in the upside direction, I think we're in for a pullback, which could give us opportunities for longs at cheaper prices. But if we can break out the low of this bear flag, then I think we could see some more continuation to the downside. All of this is, of course, hypothesis and speculation. There's no guarantees of any of these things working. And for gold, back to indecision, back to balance, back to grind, back to choppiness, back to what we've been in for the last month. We added 5,300 in open interest off this high on Friday. Not really that concerned about it, although that is a pretty significant number, and the market's been trying to grind to the downside ever since. Yesterday, extremely low volume. We've already beaten the volume yesterday, today. That open interest increase on Friday does increase the probability of new short bets. Going to have to see how all this plays out, of course. I'm looking at this whole situation, except for down here at the lows, as opportunities to use short time frame information, because if we're in short time frame control, short time frame information has a higher tendency of being respected. Short time frame levels. Here's yesterday, 20th. Here's Friday where we added 5,300 in open interest. We didn't lose 53. We added 5,300. Again, adding potential new bets to the short side. They're continuing to get paid. Where did the market stop? Well, yesterday the market stopped near the lows of the extended hours session yesterday. Where did it stop today? In the overnight, it stopped right at the point of control from last Friday, which is a visual level. We probably even talked about the idea this was Thursday. We probably talked about the idea that opening and coming into this area boded for repair from this level to this level. Is this the repair we're looking for? We're back in range and value. Try and stay patient. Overnight lows, overnight highs, value lows, points of control, and overnight ends of ranges tend to be the levels that short time frame levels try and test and trust for the opportunities. And quite often that's just the way it works. We can even go further back. Thursday's low in the overnight was the overnight from the previous extended trading hour session. Here we looked below and came back in, but here's where the market fell out of sellers down here and came back and moved higher. Here we've got a day that opens, basically spans the entire value area from the previous day and finds support at the low of value. This is a day that ignored everything, but you can just go back and you can see, here's value low, value high, value low. Value high was the swing low from the previous session. You can go back and just look and find short time frame levels that the market respected as long as we stay in this market state. The problem is we don't know which levels are going to be respected. So be patient. The nice thing about it is all these short time frame levels offer us the opportunity to limit risk. That's the name of the game. So here's the euro, similar situation to gold. We have largely in balance, central and weekly kickoff range. These pink lines are last week's range. We're inside of it. We lost 1,200 in open interest on Friday on a push off here. Seems as though the energy seems to be leaving this market. Here's the 30-minute chart. Again, just kind of similar. We've opened with a gap. It looks like we were attempting to close the gap, but if we can't close the gap, maybe that gives us the opportunity to check last week's high or even points higher, like this unchecked point of control or weekly kickoff high. The market's largely been working on the repair of value, the repair of the profile from Thursday, very similar to what gold has been doing. Short time frame levels rule here. Short time frame levels rule. I mean, even Friday we traded down 2 through and then just kind of ranged back above the point of control from Thursday. You can kind of go back here. The Thursday's session opened at the point of control from the previous day and tried to come up here and close this gap. All of this is short time frame control, short time frame respect. 10-year. Okay, the news is out for the next 5 weeks. The market, it's absorbed everything. It seems as though the market is just now chilling out and hanging for the next information. We've got a doji going so far today. Not a lot of volume yesterday, of course. We're seeing the market falling into balance. We've got small ranges. It seems as though this market may be coming into a little area of compression that may build energy for a move outside of this one day and in one direction or the other. But it looks like the market is falling into short time frame control. We lost 17,000 in open interest on Friday. I find that to be somewhat interesting. Here's the 30-minute chart. So yesterday's range completely inside the regular trading hour range from Friday. We're still completely inside that range from Friday. Here we are. I don't even know what to say about this. Again, in a way, I see these markets as somewhat unremarkable. Somewhat unremarkable. Do I sound really loud to you guys? I'm sorry if I do. I'm going to take a little bit of heat off of this here. All right. Let's take a look at the natural gas, and we'll move on to let's make money. So Freeport, Texas, still affecting the market. We've got a weekend gap here. Weekend gap. What's going to happen here? There's a possibility that something could change and we could set a island low here at some point. It's one of the things I'm monitoring for. I'm really not that active in the natural gas to begin with, but I find this weekend gap to be interesting. Friday, we added 1,800 in open interest. That's healthy to a downside auction. We don't know what we did yesterday. It's not even really going to matter. Now we're inside the range from yesterday. Here's the 30-minute chart. All of this from here down indicates this market is holding shorts in short time frame. We're back in range. We're back in value. I'm going to suggest trying to stay patient. If we're in short time frame control, value high or the overnight high might be interesting opportunities for an execution. We're showing signs of excess down near weekly kickoff low here in a short time frame, so I'm going to be a little bit cautious as far as looking for shorts at this point because we do see a lot of excess in this bar here. The market looked below the range from yesterday and swiftly rejected. We're now open. We're trying to push to the upside again. I'm just going to be watching this range here for short time frame opportunity. We get outside this, then things may be changing, and we may have to look at going with a breakout outside of this week's range, up from here to here. I wouldn't even count this. This is rejection. The low from yesterday, more interesting. So while I think most of these markets are genuinely kind of unremarkable, there's not all that much to be thinking or doing. There's no real gaps. There's no late spikes. There's just kind of hanging around. A lot of these markets are range bound and short time frame controlled. It's synthetic Monday for me. Mondays tend to be not my best trading days, so I'm going to make sure and stay patient today. We'll see if we have that opportunity in Make Hogue Money. Brody, I see your comment here. Next time you're on your hog in the Northwest, let's use Sarah and I share a cup of Joe and talk smart. Yes, that sounds like a blast. I would love to do that. It's probably going to be a while until I have my motorcycle all the way out in Seattle. The last trip I was, 24, 25 years old, and, it was kind of brutal on a body to go from Chicago to Seattle on a motorcycle. Maybe I can tow it out there this time. We'll see. All right, let's take our deep breath. Stay humble, grateful, and creative in your trading today. I'm looking forward to seeing you all at Make Hogue Money. If I don't see you, that's okay. We'll see you the next time. If we do see you, let's make some money. Have a great trading day today. Get out there and make some money. It's Tuesday, so we are going to be having the coach's playbook, and I will be doing the recap at 3:00. So you're going to get to see a lot of me today. So I understand if you're going to pass on Make Hogue Money. But let's get out there and have a good trading day. Be patient, stay calm, cool, collected, and creative. Let's get out there and make some money. We'll see you in a few minutes.